What's going on, everybody? Welcome back to another weekly market update where we predict where the market is going to go for the next week or months. We've been scary accurate this last few, pretty much since the beginning of the year. We predicted that we'd be seeing some more selling off. We've been warning you guys on the channel. If you've been watching every week's video, you should probably have done really well this last few weeks. Well, if you're not watching these videos and you're just investing, you're probably like don't know what's going on at all. You're probably shocked. What's all this selling off all about? Why is this selling off? Why is my long-term portfolio down 30, 40, maybe even 50%? The whole FANG stocks have pretty much been crushed, apart from Apple. Really, Facebook's down huge, Netflix is down huge, Google is down huge. So a lot of these stocks have just been getting destroyed. In today's episode, we're going to talk about where's the stock market going to go. Are we going to see some more selling off? Are we in a bear market? Should you be pulling out your money? Let's talk about all that in today's video. But make sure you watch the whole video. Make sure you subscribe to the channel. If you feel like trading with me live every single day, you watch this video and like, hey, how's this guy so good? You can day trade with me every single day live in the links down below. The only place you can get that is at www.smallplayers.com. Don't fall for any scams, again, some DMs or some fake accounts messaging them, sending them some, asking you to send some crypto to them. Guys, I'm not going to message you. I'm not going to ask you for any crypto. I don't know, going to ask you for your WhatsApp. Only way to trade with me is in our Discord. Link will be down below. But let's get straight into the chart. First, I want to talk about the Nasdaq 100 index. Very tech heavy index. We're looking at the monthly chart. I'll just show you guys the comparison. If we go back to the 2000 bubble versus the current Fed bubble, I'm gonna name this the Fed bubble from the COVID crash till now, pretty much. Because this bubble that we're currently in was created by all this free money entering the market. Interest rates being almost zero, free money, stimulus money being given out, and all those sort of things. You can see how this Nasdaq 100 had a parabolic rise in the up to the 2000 top in March. Then reversed down and came down crashing, and really was in a bear market for so long. And a lot of people, this is what gets me really upset. A lot of people say, oh my god, bear market is only last 10 years. Look how long it took. Look how long it took. It took all the way up until 2015, 2016, we finally had the breakout. Took from 2000, this top in 2016 years for the Nasdaq to make a new high. Now the counter argument is like, well, you're buying the dip all across here. You're buying these dips. You're buying it here. You buy it here. You buy it here. You get a nice average price. So you do, if you bought it up here, you do lower your average. And sure, that is the case. But a lot of people don't do that. A lot of people end up just, they bought it up here. They get very discouraged as they see everything down. This allow for a huge loss. So just be aware. They took from the 2000 bubble, it took 16 years to make a new all-time high. So if you bought up here, for you to just break even if you didn't average down. Now, if you average down, different story, but if you didn't average down, it took you 16 years to just break even on your money. Are you willing to hold 16 years? Long-term investors, maybe your answer is yes, but just be careful of that. But that's why I was telling you guys up here, I sold everything January, February of 2022. I sold almost all, 80% of my long-term positions. Long-term positions. Keep in mind, I was holding things from down here. I was holding things from here. I was holding things from probably 2015. What is 2015? Right here, 2015, 2016. Those are some of my longer positions. I decided to sell 80% of all my positions. Still kept some skin in the game in case we do make it higher. But I think it was time for me to take profits. And soon I might be starting to add back. I'll be showing you guys where I plan to add back, if I do plan to add back on some long-term positions. Now let's get into the S&P 500. S&P 500 looking quite similar, not as crazy. We had this parabolic rise from the 95 all the way to the 2000 bubble. Then we saw a crash, but looking a little similar here as well, but not as crazy as Nasdaq because S&P does hold a lot of other things in it as well. S&P 500, we saw this top here, this false breakout, and everybody in the news media was talking about, hey, we broke out of this double top level. We're for sure going to try to go for all-time highs level. but that was just a false breakout, and I warned everybody about a potential false breakout up here with this exhaustion gap right before it, being a red sign. And ever since then, we had a nice little push here, got rejected, which we had talked about the weekend right before on our weekly market update videos. We had talked about the 100 and 200 MA potentially forming a death cross and will be resistance, and just like that, got rejected on the 100 and the 200 MA. And now we see this death cross really happening. We see the red crossing below the purple, which is the 200. Now we're sitting at these lows from the bottom down here of the Ukraine-Russia situation. We're sitting at these lows, and could be a potential double bottom. Do I think it's going to be double bottom? I don't think so just yet. I do think we're probably going to see the 400 level before we see a reversal up. So the 400 level is what we have this gap. And it was kind of our target earlier in this year before we had that bottom on the Ukraine-Russia situation. Now, the thing that the stock market likes to do is it likes to bottom out on bad news. And you're like, wait, how does that make any sense? How does the stock market likes to bottom on the bad news? Shouldn't bad news bring it low? Actually, it's quite the opposite. It likes to top on good news. So whenever you have a good news, usually you like to see a top. And when you have bad news, like we saw with the Ukraine-Russia situation, it actually caused the bottom. You're like, wait, Russia's invading Ukraine. We had a massive sell-off, and it actually just rallied straight back up. That didn't make any sense. And then actually the strong rally was down here with the Fed meeting, which we had talked about. That was our, we thought we would see a bottom around there. And we really did around this date right here. And we correctly predicted that. Now for this push down, what I'd be looking at, or what I was thinking that it's a speculation, is that we might bottom out on the Fed dates where they're having their FOMC meeting, where they talk about their QE, their balance sheets, their what they're going to do with inflation, how much they plan to raise rates still. There's rumors that could be half a point increase every single meeting for the rest of the year. It could be all that. So my speculation, this is speculation, it's me guessing what the Fed's gonna do, would be that they might sell it off down here, and then on the Fed meeting day, there could be good news. Could be that the Feds end up doing something the market relates. It could be even even if they are aggressive with the interest rates, it could be that the market likes it. The market maybe might like that the Feds are deciding to take a strong move against inflation. Inflation does need to be cooled off. The Fed have done a lot of mistakes, I think, throughout 2020, 2021, that the market really liked, but inflation really hated. So my speculation is we might see a bottom around this 400 level on that Fed meeting day, which is May 4th. Now, like I said, I am open to being wrong about that. I'm not going to fight you if you think that we'll probably go lower after that. The technicals are looking that we might go lower, right? The technicals are looking that we might go lower. But personally, I don't think this area here was the top. A lot of people might think that this is the top, and now we're in bear market. Personally, I think that the bull market is probably going to come around these 500 levels. I think we have one last push. I think we're in the middle of the topping process. So huge hedge fund managers have trillions of dollars. If you add up all those hedge funds, they need to slowly release it, slowly sell it off, push it back up, sell it off for them to get out of these huge positions. Also, when we're going to come closer to that Q2 ending, we're probably going to see, the hedge fund managers want to push up their numbers. They want those bonuses, just like we saw here when this first quarter ended. We had a strong rally, and a lot of it was most likely because the hedge fund managers don't want to miss out on their bonuses. So they had to push this back up. So I think most likely bottom somewhere around this 400 level. Fed meeting might come out good, and then we'll start another fake push to all-time high level. A lot of people are going to be thinking like, okay, this is just a little scare, or just a preview, for us to go into bear market by the end of the year. So I think Q2, Q3 especially might be good quarters for the stock market, trying to push it to a potential new all-time high level, and that being a fake push to eventually lead us to a bear market. And another reason why I believe that is we just got the inverted yield curve about a week ago. And usually when you have an inverted yield curve, you don't have a bear market right after. Usually it might take 6 months to 12 months to see a bear market. So the inverted yield curve is a warning sign for a recession to come, and all the CPI data is pointing to recession coming in about 8 to 12 months, 6 to 12 months, sorry. So a lot of things are pointing to a bear market coming or a recession coming in the next 6 to 12 months. So I do think we can see another topping on our top before we get a recession. Also, another thing I like to point out, we had the quarter GDP numbers come out and the GDP was negative, which means the GDP is negative for the quarter. Economic growth is slowing down, it's coming back down. 70% of economic growth is through consumer spending. If you have high inflation, if you have free money in the market, people are not going to be spending as much money. So for it to be a recession, you need 2 GDP quarters being negative. That's what defines the recession. If you got this quarter and it was negative, and next quarter is positive, it's not a recession. You need 2 negative GDP quarters to be counted as a recession. So we might see how that plays out in the next quarter. It's going to be very, very interesting to see. But my speculation, and I want to call it speculation because the technicals do support a bounce at this 400 level, right? We have this strong 400 level here, which was acted as resistance support multiple times here, and it has a gap to fill. Usually the gaps like to fill and reverse up. It was a resistance level here, support level here. It's the next big number for us to reach. 400. We could see us come down to even 390 or so. Just to maybe have a potential fake breakdown, and then trap people up, just like we had a fake breakout up here. Keep in mind the market loves those little fake head pumps. Now, I personally still think we're not in a bear market on a technical standpoint, because we're still in this channel that we've been in since the 2008 bottoms. We had overshot it a little bit over here, but personally I still do think we're not in a bear market just yet, because we're sitting in here. As you guys can see, these trend lines from the bottoms, and we still have this target up here of 5 at about the low to, it's a little high. I'm gonna bring this down a little bit. We're about 510 or so right about there. The 5 hangs out a little higher than that, but that's what we are expecting to see, the full top. Now, I'm okay with it we've been wrong. This could be the top. I did sell almost all my long-term positions because my mentality was, hey, even if this is the top, right? Or if 5 is the top, it won't change my gains too much. So I was okay with selling most of my positions down here. Of course, my trading is going to be a whole lot different. Now, I will start taking a slight position on my long-term portfolio, start adding back some of those gains I already taken out around this 400 mark, this 390, 400 mark. As at first, I told you guys I've not bought a dip. I've told you guys I'm not buying a dip. I told you guys here, and I told you guys here multiple times, not on this channel, also on the Instagram that I know most of you guys follow me on. If you don't follow me, make sure you do. I told you guys I've not been buying any dip so far. I will be buying a dip. Finally, my first dip buying opportunity around 390 and 400 level. I think it's going to be a nice little long-term position for me to hold. And like I said, it's very slight. First dip for me, it's going to be the Vo. It's going to be probably Apple and not much more. Maybe, add a couple other decent ETFs to it. Not going to be really jumping heavily into tech. Now let's talk about the triple Q. We already went over the Nasdaq, the triple Q. Looking super weak, hit the new low. Despite technically the S&P 500 hasn't really hit the new low just yet. But the triple Q has hit a new low. This new low being 313. Major number for us to see on the triple Q will be this 300 level. Just like we saw, it was really like 298, 300. We'll put it around there. Huge numbers for the triple Q as well. I could probably see this being our main target down here. Same thing with the triple Q. And the S&P 500 saw resistance once, twice, 3 times, support, and I think now we're probably going to come down and test it. We probably see an intraday bounce or maybe just a little dip or under and then bring it back up. Keep in mind, the stock market loves those fake breakdowns, but we'll probably see a nice rebound. We had 4 straight weeks of red in S&P 500, so the odds are stacking towards a green week. And if we see where the go back to the S&P 500 weekly chart real quick, and we see where that first red week started, where we had this terrible streak, the worst streak since 2008, and that's when the Lehman Brothers happened in October 2008. This has been the worst month since then. So ever since the Lehman Brothers month, when the whole shebang went down, this has been the worst month since then, which is just wild, right? And you guys remember up here, we told you guys short. We were excited here. We had a nice little rip up, and I told everybody, look at that weekly candle. That weekly candle, grab your doji. Most likely, we're going lower. And what happened? We went lower. We lost. Also, we had the week after we spoke about this 50-50 sell signal, which is the weekly MA. S&P 500 losing the weekly MA on the weekly and the daily time frame, and that definitely did play out really nicely. And now more than likely we're heading this 400, which is also this 100 MA on the weekly. This red line is the 100 MA on the weekly chart, and that's more than likely our target scenario. So the IWM, we have finally fallen through, made a new low below this strong demand zone. So this is a strong demand zone. We've fallen through it. We had formed very similar pattern to what we saw down here, and more than likely, unless it's a false breakdown and then a push back up, more than likely we're gonna go test this 200 MA, which is the purple line, long-term area of support. So more than likely we'll probably be testing that on the IWM. You see a thing that we come pop back up and then reject in the low 190s, and then retest it up here, and then potentially start climb up again. A lot of this mid small cap stocks have completely gotten destroyed in the last since the beginning of the year, really, and more likely they'll probably find the bottom, I think, around that 200 MA. So now let's talk about gold. I'm of the camp that gold might be still seeing potentially higher. Now we have this high here, then we have another high that's actually a lower high. So I could be wrong, but I'm a believer, and I took a position on gold, which had been out on the last week and a half or so. I had the position, we broke out of this, but I closed that in the green around 180s after we had this little breakout here, but then we failed this breakout. We tested here under MA, failed that too. But I did take a position on this double bottom here on the daily, which then we rallied. We had another push up here, but ended the week on a bit of a doji. Could call that a Morningstar doji as well. I do think that we might see a gap filled around this 179 to 180 level. So I did enter position on the weekly too as well. You can see the gold is looking pretty good on this double bottom. As long as we get continuation next week, it is one of my top watches for next week. I know gold doesn't move very exciting, but I did take a position on gold, and I feel like I should be telling you guys about it. Now if you go to the US oil, the crude oil, still we were expecting a strong breakout. When we did breakout, we pushed higher, we got rejected, came down, found support, bouncing on it. So still eyeing this, these levels, and we could extend this triangle level a little more like this. Now, if it's still contracting, a lot of people are watching oil to have a strong move either up or down. I still have a high on my watch. We can probably adjust the contractions getting tighter, and once we get near this apex in this 100, we'll probably start seeing a breakout. So there's two things I'm watching. If we go to XLE, which has been the strongest sector, that one had a week on the green. I came down to retest the 70s, found some support, but another one that now I'm not too excited about until it pushes for a new high, because it did have this little breakout here, failed breakout, and came down. So all things are having had failed breakouts that we'll be watching for the weeks coming. Also, we did see this inverse head and shoulder we were pointing out end up failing, which I told you guys last week. I thought more than likely was going to fail. This inverse head and shoulder, which we're speculating about since a couple weeks before last Sunday's video. I talked about it. We're potentially going to fail that and most likely move lower. Still think we'll see lower. I'll be speculating it's a long-term position around the 390, 400 level on the S&P 500. That's where I plan to start buying my first dip. I'm speculating that potentially the dip or the bottom will come on May 4th. Now we predicted that down here. We predicted this right here. I told you guys to sell everything around these levels. So we've been quite accurate. Will we be accurate again next week? Let's see. Let's find out. And as always, make sure you like the video. Make sure you comment. Make sure you subscribe. And I'll see you guys in the next video. Peace.